Hello, ladies and gentlemen. Welcome to yet another wonderful episode of Bitcoin Summer. I am your host, Brian Cameron. Thank you for joining me on this fine Saturday. Welcome to the Midwest. We got dumped on quite a bit overnight, and I got all the snow cleared out of the driveway, so we are ready to rock with all the Bitcoin knowledge that you need and some investment fundamentals as well. So what we're going to do today, we're going to take a look at what's going on in the markets. Obviously, there's some, some hiccups going on right now, and why that has to do with the Federal Reserve. We're going to jump into all of that later after the intro. And I'm going to do a little clip from an impromptu interview that I had with Charlie Stern on Reddit live streaming last Saturday. And so we're going to listen to a little bit of that as well. And of course, we're going to see at the end, we're going to see where we're at with the Bitcoin Summer portfolio, which I introduced last week. And this will lead us into our investment lesson of the week. So out here, it's cold, it's snowy, but in here, it's always Bitcoin Summer. Price this out of the education market. They price this out of the stock market. They continue to price this out of day-to-day goods. We need to take this back, and this is our time to do it. As I alluded to at the top of the show, the Federal Reserve is in the driver's seat right now with the markets, and we are at their whim and at their mercy at the moment. And I explained it a little bit last week how the traders were in the driver's seat, and they are to a certain extent still, and why we'll jump into a couple charts today. But a lot of them got flushed out on leverage. So a lot of the trading, the degenerate trading that was going on previously a couple weeks ago, a lot of it got flushed out, and we're going to see more and more of the on-chain fundamentals. At least that's what the on-chain analysts are saying at the moment. So we'll see. We're going to kind of parse all of that information as well. But even above and beyond what the traders are doing right now with Bitcoin and kind of the manipulation that's going on price-wise, not fundamental-wise, by the way, and that's why we are into investments, because we can exploit those market inefficiencies with price when it has nothing to do with fundamentals. And let's take a look at this tweet, Travis Kling, earlier this week. The market is currently pricing in 3.5 rate hikes for next year. Now, what this would mean for the stock market is a plummet. And as he's suggesting here, it's not going to happen. At least not to that extent. We'll kind of see. But there is just no way that they can go that heavy on rate hikes. And there's a ton of reason why. If you guys want me to do a deep dive on why the Federal Reserve can't do rate hikes, I can do that as well. It gets into the weeds quite a bit. But in an election year, the midterm elections coming 2022, the political appetite, in my opinion, is just not going to be there. And it's just interesting to see them just play these games, because there's, the inflation's getting out of hand at this point. And we just printed a CPI number that was, at levels that we haven't seen since 1982, and that was the year that I was born, actually. So it's just interesting to see them play these games. The QE, we're going to get into this territory where the QE is going to be even crazier than the QE that we saw in 2020. The QE is quantitative easing, and that's when the Federal Reserve boosts up their balance sheet, which floods money into the market, which props asset prices up to levels that they shouldn't be, basically. Which is why we even saw, I think the Dow Jones hit a record high on Friday, even after all of this Fed taper talk. But they're giving little bits and hints that they're just not going to fully go into this. And it's just interesting we're going to find out within the next couple of weeks what the moves are actually going to be. But what's important right now is the signal that they're giving to the market, and that's what's manipulating the market right now and making it kind of be a little bit volatile. Like I said, the QE can't stop, and if it does, it's actually going to be a benefit to the market. It's actually going to create more money printing, and you'll see assets, and especially Bitcoin, rise up. And that's why I don't think a lot of people are calling this bull market to be over. I think we're in a perpetual bull market with Bitcoin, and we're always going to have these. It's a volatile asset. It's a scarcely traded asset. It's such a scarce asset that, yes, the price can skyrocket when there's demand, but that goes in the opposite direction as well, and that's what we saw the last couple weeks. And this is why I've always stressed on this show, don't invest money into Bitcoin if you need it within the next 4 years. And there are certain times when that's a little bit, you don't need that 4-year time horizon, but that's just a safe bet because Bitcoin has never seen a decline with a 4-year holding period ever in the history of Bitcoin. So we always have to have this long-term outlook with any investment, but especially with Bitcoin because it is so volatile. So if you are patient enough and don't over-lever yourself too much, you can benefit from the uptick of Bitcoin. And that is kind of what I'm trying to instill on everybody out there that's listening right now. And I'm hoping that it's starting to get in there a little bit because, I started this podcast when Bitcoin price was tanking and nobody wanted to listen to anything about Bitcoin at that point. And it's kind of still the opinion, we'll probably start to see more Google searches as time goes on here within the next couple months. But retail is just not there right now. There's not a lot of enthusiasm, and people are just down on every risk-on asset right now. And unfortunately, Bitcoin is still viewed as a risk-on asset. It should be viewed as a risk-off asset, but that's a whole different topic for another day. I also wanted to pull up this tweet from Brian Chapata, and this is, I alluded to the FOMC meeting, which is going to be on Tuesday, and that's the Federal Reserve. They are going to be deciding, or at least signaling to the markets, what their next moves are going to be. And people think because of this Friday, CPI print that was insane, 6.8%. People are thinking that the FOMC is going to definitely ramp up their targets for interest rates. And also, on top of that, this complicates it because if they don't talk tough enough on inflation, and that would mean raising rates, their confirmation hearings, like Jerome Powell's confirmation hearing, it just got pushed out till January. So I think he's going to want to do even more signaling that they are going to be aggressive on rate hikes. Again, like I said, it's a fake out. And a lot of times what's important with Federal Reserve signaling is just the message that they get out there. And that alone sometimes can even, bring inflation down a little bit just from them mentioning rate hikes. Because the markets are a forward-looking instrument. So it's just interesting to me that in the midst of all this price weakness, we're going to most likely have a little bit more this week, right around Tuesday. Now, I could be completely wrong, and Bitcoin already had its correction, or the Dow Jones and NASDAQ and the S&P were already signaling that they're over this news already. My base case, though, especially with the Bitcoin summer portfolio, is we're going to see a little bit more weakness into next week, and then we're just going to see kind of boring markets and boring Bitcoin, possibly for the rest of the year, and then some more strength. That's what I think. That's my base case, because the tapering and the interest rate hikes, in my opinion, are already priced in. But not only that, not only are they already priced in, but they're already priced in too high. So think about that. We have an information imbalance here. And the only way for the balance to go back to what actual reality is a positive news story for Bitcoin and a positive catalyst for the price moves. We won't even need an ETF announcement. We won't even need another country declaring Bitcoin as legal tender. Those things could happen as well. But think about being on the wrong side of that when the Fed in January or February says, oh, guess what? We can't do the rate hikes these high, but the market has already decided that they're going to be that high. So, positive catalysts coming up. There is no reason to be bearish right here. You know, like I said, no need to just dive into a crazy strong position right now, in my opinion, but all of this stuff is churning out and the market's just trying to figure it out right now. And we're just going to be in this wash right now, which is fine. Going sideways is fine. You know, it's a lot less stressful for me, to be honest with you. So let's do a little bit of backstory about what the Fed's been doing. They've been buying 120 billion with a B dollars worth of government-backed bonds. They've been buying their own treasury bills since COVID, since March 2020. We've seen something like 40% of the money supply has been printed within the last 18 months. Now, these aren't just treasury bills, they're also mortgage-backed securities. Does that ring a bell? What caused the last financial collapse? Mortgage-backed securities, credit default swaps. Now, the government is getting into bidding on way riskier assets, way on the other end of the risk curve. And there's just no way else to parse it. The Fed is propping up the economy, propping up the stock market, propping up assets. Because what happens when they pull back? We see another collapse of the system. Like, it'll make 07, 08 look like child's play. I've said that on here before, and I'm sticking to that for sure. So, as I alluded to, we'll cover this when I go over the portfolio, but the basics of investing for me and my cornerstone, and a cornerstone of a lot of successful investors and traders, is the exploitation of the mispricing in the markets. And that creates an opportunity for us. And we need to take advantage when we can on those opportunities. But first, before I jump into that, I wanted to go into my chat that I had with Charlie Stern on Ask Dad Why. This was a Reddit live stream last weekend, and I'll have the link down below, and you can check that out. And I just wanted to play a little bit of our conversation because I thought it was a lot of interesting stuff. Any chance I get to talk about the Lightning Network, I take that opportunity. Now, his audience is more of a general investment, curious about investing, varying degrees of knowledge about Bitcoin and the space and the ins and outs and all that and the opportunity. But I thought of it as a great opportunity to introduce people a little bit more in depth. You know, level 2 of the level 2, if you will, of the Lightning Network. Any chance I get to talk about the Lightning Network. As you guys know, I'm a huge proponent and a huge fan of Lightning, and being a node runner myself, I just love chatting about it. So here's a little bit of that conversation here. Oh, and by the way, the picture is choppy, so it must have been something with his streaming latency problem, because all of his other videos look just fine, but when him and I are on the screen, there's some latency issues, but the audio is just fine, so bear with it just a second.
And so today, in the absence of that development you're talking about, today the path has to go through a series of nodes that all have sufficient liquidity to cover that transaction.
Yep.
So if I have a $10 transaction with McDonald's, I got to hit all the nodes that can handle $10.
Absolutely.
If I had a $1,000 transaction with McDonald's, which would have to be a big kids party or something, But if I had $1,000 transaction with McDonald's, I'd have to today find a path through the Lightning Network where every liquidity pair or every payment channel could support $1,000.
So think about it. Yeah, think about it this way. So you're not going to want to do $1 million transaction on the Lightning Network. You won't be able to, as of right now. But think about it. If you do want to send $1 million to somebody, do that on the chain, because the percentage is so low. I mean, I was watching. It comes in all the time. You can see it on the mempool, but transactions of like $8 million or 10 million, like, and they're paying like $8.
Right, I've seen that too.
It's mind blowing. So
it's striking how many really large transfers occur on the Bitcoin network today. So what we're talking about here is this is like day to day. This is useful, practical, day to day transactions.
All right, yeah. So we had about an hour-long conversation, and if you want to check that out, again, the link is down below. It was a fascinating conversation, and thank you, Charlie, for having me on. That was great. And so without any further ado, we're going to take a look at the Bitcoin summer portfolio. I know all of you guys were waiting with bated breath as to what is happening with Brian's portfolio. So as I alluded to when I introduced the portfolio last episode, we were starting to see some weakness at that point, and that trend continued a little bit. We actually saw a pretty nice shakeout since I introduced the portfolio it was right around the same, within the same couple days. Obviously, my portfolio saw quite a bit of shakeout, as you can see with the numbers in red here on the left-hand side. And this is just fine for me, and I'll tell you why. It's actually going to make it quite a bit more interesting for the show to try to dig myself out of this hole. I'm trying to reach $40,000 by the end of 2022, so that's in a year. So it's going to be 161% gain, as I mentioned last week. But I felt as if when I introduced it last week that the portfolio had already had quite a bit of gains, and that perhaps maybe I was cherry picking the performance and introducing it while I was up. And that wasn't the case. It was just timing wise. That's just what happened. But just when I started recording this podcast in early summer, the market had just tanked. Again, nobody wanted to hear about Bitcoin. But this is why I think it's really great that this portfolio tanked right away. Is this portfolio is just as genuine as this podcast or this web show. And this is going to show the realness of it and the actual strife. You see these influencers and these traders or whoever online, and it's always the wins. They're always showing you the wins. Here's the win, here's the win, here's the win. I always wonder to myself, I mean, how big are these guys' losses? Because they're not showing them. So, yeah, you made $100,000 on a week on a trade, but how much did you lose that week? I mean, it sounds like a stressful lifestyle to me. But that's why I want to be upfront, honest about this portfolio, and we are all human, and this is the thing about investing. And this is what shakes a lot of people out on investing, or even, and this is less of investing and more trading. So take that with a grain of salt. But you get my point. People forego. They'll sit in cash in their bank account, dying a slow death, and they won't take the risk on to pull themselves out of that hole, that inflation hole that they're in, that everyone's in right now, because of weeks and days like what just happened. And you have to have faith in your thesis, and you have to stick with your own rules, because if you start going outside of the bounds of that, you're going to get yourself into trouble. And like I said, this is going to look different for everybody. Everyone has different goals in mind. And this is why I tell friends and family and you all out there, the easiest way to do this is just dollar cost average into Bitcoin or other things in a balanced portfolio if you want. I'm not into balanced portfolio ideas. I'll get into that down the road, but I'm more of a concentrated portfolio type of a person. And because I think you diversify your gains away. But anyways, let's not get into that right now. But my point is, the easiest way to do it, dollar cost averaging into your favorite assets and just forgetting about it and riding it into the sunset. And you will do better than 98% of the people out there. And you'll do better for sure than the people that are just holding cash. There's no doubt about that. So I just wanted to kind of go over those basic investment principles and those basic investment lessons that a lot of us in investing have learned the hard way with cash, with cold hard cash that we have lost. And it's been an expensive learning experience over the years. But when it starts to work, you start to have more confidence in yourself and you start to have faith in your ideas, and you don't let anyone else shake you out of those ideas unless they have really good ideas themselves. But you have to trust and follow the right people. And I keep that very minimal to the people that I listen to. And I don't even take the people that I love to listen to 100% all the time. And no one should. So just some investing basics. So let's jump into what's actually in the portfolio now. So I announced this on Twitter. I bought a hefty portion of Bitcoin Friday on the huge plummet below 50,000. I just couldn't believe that we were below 50,000. And Bitcoin has a way of smacking you in the face when you think you know what's going to come next. And that is such a lesson for me and for everyone out there. So I bought $2,000 worth, as you can see, December 3rd. And I'm not going to be selling this. This Bitcoin is going to be going into cold storage. But I have some GBTC just in my brokerage account and that I bought over the summer. And I'm just going to take out, once I reach the gains that I want to on this trade, I'm just going to take that portion out. I might even on some of it actually be able to take a loss on it, which would actually be a tax gain. And we're going to go over tax implications for selling stocks and selling assets and selling your Bitcoin, if you choose to do that, but I don't. But we're going to go over the tax implications. That's going to be another lesson down the road. So please subscribe to the show, hit the like button, get other people out here watching this. But we're in this place right now where it's like, I'm seeing weakness in my portfolio, but I'm really excited about this position, this $2,000 position. And like I said, I will sell my GBTC when it comes time, and then I'm going to throw that into cold storage. Well, as soon as possible, throw that into cold storage, and then just take the GBTC cash and then put that back into the cash for the portfolio. So that's how that's going to work. I'm not going to sell any of the actual Bitcoin. If we get to the point of actually, being able to sell it, hopefully we can get to that 20% level. I'm getting a little bit of latency here. So let's see. I think it's better now. Okay. Sorry about that if you guys caught that. So as you can see, just over $15,000 in initial funding. My realized gain and loss has dropped now since last week to 954. And the reason that is because those calls that I bought that expire December 23rd, I just went ahead and retired those because, it's going to be hard to get to those strike prices. They're in the teens, and we dropped below $9 on whatever it was, Friday. So it's not looking super good for those, but there still is a chance that I could profit on these or even get a little bit of the money back. So we'll see. I just wanted to show you what this portfolio might look like if those calls expire worthless. And also I lowered my cost basis on my HUT shares And we're going to do more on that next episode, because we're going to be discussing on next episode options. So we're going to be doing calls, puts, and then hopefully we'll have time to talk about what I'm planning on doing with these HUT shares. And that's going to be writing covered calls or selling covered calls. And it's a way to boost, if my HUT shares go up 20%, that's great. That's fantastic, especially if it's within a month or whatever. But with selling selling covered calls, I can turn this return into 50% or 100%, depending on how this is all going to shake out. And I will go over every single detail for you on that. As I was saying, I retired the December 23rd calls, but I did put another HUT call on the books here, this $220. See, my allocations to calls and options are very small because the upside can be very big, but the downside can be 100% down. As you can see, the November 16th call expired worthless, and then these two December 23rd calls. So those are all going to be losing 100% most likely. And it's just, this goes back to like portfolio management. You don't want to go 50 or 80 or 100% in calls, because the market is smarter than you. And normally what's going to happen is you're going to get outsmarted by the market, and these calls are going to expire worthless on you. That's normally what happens. I got lucky with a lot of them from October on, but again, it's only a small portion of this portfolio. So just keep that in mind. Just if you're going to be playing with calls, don't do it more than 2, 3, 4, 5% of your portfolio, and you'll be just fine, because the gains on them can be 100, 200, 300% sometimes if you do it right. Especially if you buy calls with the earnings from another call. And that's all tactics I can get into on the options episode. All of this brings me to such an important point about investing, and in this case, trading here, I guess. But, let's just set aside my feelings for Bitcoin as potentially the next global reserve currency. Here, I'm trying to earn income, though. And it is so important, especially when you have gains in your portfolio, to reserve a little bit, sometimes a lot of it, of cash. And this way you can take advantage of the mispricings in the market that I've been talking about this whole episode. Now, had I placed all of my portfolio in any of these assets, like my entire cash allocation into assets, I would have had to wait for a bounce back of these prices just to get back to even, let alone make a profit. So I could be waiting for months. I could have burned months off of my portfolio, getting closer and closer to that deadline, and not have any gains to show for it. So this is why it's important, if you're setting up something like this that's more of a short-term thing, you really, really want to, as prices go up, hopefully, that's what happens usually. Hopefully that happens with the things that you select. As prices go up, you start taking profits. And then you just recycle that over and over. And that's what the portfolio does. And like I said, completely separate from my investing portfolio. I don't even touch that. I've spent that money already. That's gone. I'll get to spend that 10 years down the road, 20 years down the road. And that's what I'm really excited about. But right now, I'm just trying to earn income. So with these new asset purchases, and I still have just over $4,000 in cash in the portfolio, now we're seeing 10, 15, 20% discounts on things that I want to purchase. And I will be deploying the rest of that cash possibly pretty soon. So I might be deploying it all this week, depending on what the Fed says. If we get an all clear signal, which I don't think is going to happen, but if we do, or even if we don't, I might be spending all of this cash this week and getting it out there because this is the time when we're seeing weakness. This is the time to take advantage and be that sniper and be that that alligator, or that sloth, or whatever animal you want to choose to be. And so, in closing, we are in the passenger seat of the Federal Reserve clown car right now. So I'm waiting for this more volatile week I think that we're going to have. We had a volatile week this week, and I think we're going to get another one coming up. Like Tuesday, Wednesday, the FOMC meeting. I think it's going to see some fireworks, and we might hear some talk about, hey, we're going to do even another interest rate climb. We're going to build another one into the model. It's all posturing, and I'm not worried about it whatsoever. A lot of people are calling the end of the S&P 500 for the next year, and I just don't see it happening. But a retreat could look something like a sweep of the lows of 42,000 again. And in that case, like I said, the rest of the cash position is just going in there. And at that point, maybe we'll see a rise after next week. After all of this news gets behind us, we'll maybe see another rise, or we could see some more accumulation for the rest of the year because, people aren't going to want to take on extra risk right now and just relax for the holiday season and just kind of, get that out of your mind and January come back strong and just start buying again because you want your portfolio to look really good to your clients and your managers and everything like that. So you're going to want to try to jump into Bitcoin below $50,000 in January because it might be at $100,000 in March or April or May. And you're looking pretty good to your bosses. And I just see that happening. I know a lot of people disagree with me right now because everyone is so afraid. But just hang on tight, everyone. And I assure you, this is a great asset. We just don't know when we're going to see a climb. If we could predict that, we would all be millionaires and billionaires. But that's not the way that the world works. This isn't a shitcoin casino. And we have to do it the smart way, and we have to be methodical, and we have to learn more every day. And hopefully we can do that here. And I'm glad that you guys are watching. And it's just been wonderful for me to hear from all of you and just and hear all your good stories out there. So keep them coming in and keep up a dialogue with me, and I'm always responsive to stuff. I wanted to show you this before I sign off. And, like I said, you got to take charts with a grain of salt, but traders are, there's no demand in the market right now. The supply is just dwindling. It's just plummeting on exchanges. There is no liquidity to be had, which is why it's so easy for traders and hedge funders to manipulate the market right now because, they don't need a lot to get it to short sell and to bring the prices down and to cause liquidity shocks and all of those things that we've seen the last couple weeks. So when the traders are in the driver's seat, I like to take a look at charts because it gives me an idea about what they might be thinking. And they've been, the traders or whoever has been making the markets have been following some pretty tried and true rules lately. And I drew this on Sunday, actually, before the week started. And I have 4 different levels. I have looking bad this week, looking okay this week, looking great this week, and looking fantastic. And that goes from bad is the 47,000 level, right around there. Right around the 49,000 level for looking okay, and $51,000 level for looking great. And the looking fantastic level is right around 54,700, right around there. So I didn't make a ton of moves this week because I didn't see anything great or anything horrible. So I didn't make any moves regarding that. We've just seen this tight range, this channel just perfectly being followed. We're kind of on the bottom half of the channel. We've bumped up that middle line a couple times this week, but haven't quite moved past that. The relative strength isn't looking very good. So this is going to be something that I'm going to keep an eye on, because it's just funny that I drew these lines and it just seems like the traders traded around that of what I drew. It's just wild to me. Sometimes it's just, the traders are just too obvious, it seems sometimes. It's just crazy. But we've really been following these traders' rules this week. Like this, we've just bounced off of this 200-day moving average. Just bounced right off of it. And we've been respecting it pretty carefully. Now, if we do dip below that, and we could possibly test those $42,000 levels, like I said, I don't think it's going to be I think it's going to be very short-lived. So it'll just depend on what your time horizon is. But if we do start dipping below for longer periods of time below the 200-day moving average, I might be a little bit worried about, what might be more of an extended correction. But that's all this is right now, is a correction. And to view it at anything otherwise is just silly in my book. I mean, look at what happened in, like clockwork, in January, in February, in March. They were all these 30% drops. We're only in a 25 whatever percent drop. This is so typical that everyone forgets that this happens all the time. And then we move right back up. When will that happen? I don't know. I wish I did. And I would share it with you if I did. But I was going on the, hopefully hoping for a breakout on the RSI on the 3-day chart. And it's just, it's still in that channel. It just hasn't broken anything yet to the downside or upside. It's just kind of lagging. It did break this upward channel that we've seen since, late July or early July. Now, if it gets back into this zone, we could see that $100,000 level, like I said, by the end of January, but it might be kicked out a little bit into February, whatnot. I'm going to readjust this next week, and we will take a look at what it might look like if the RSI level is to bounce off of that line instead of just kind of, meandering wherever it wants to go right now. So the market doesn't know what it wants to do. Everyone is taking an early Christmas break, and we're just kind of in this chop zone right now. So don't do anything crazy. Don't sell your Bitcoin. I have this crazy feeling that, people that joined the whole, Bitcoin is the best form of money train. The people that have joined this year and have not seen crashes like this yet, I just feel like there's a lot of those people have been shaken out, and maybe for a good reason. But those of you who are still holding on and are still wondering what is going on right now, should I buy? Should I sell? Should I hold? I hold to, we just need to hold on, because the adoption of Bitcoin is not something that we've seen since the internet. And this is like being able to buy the entire internet back then, which wasn't possible. You couldn't just go and buy the entire internet. You can buy a piece of the Bitcoin network today for under $50,000 per Bitcoin. And by the way, you don't have to buy a full Bitcoin. Some people still think you have to buy a full Bitcoin out there. And they just say it's too expensive. You can go, people are dollar cost averaging 69 cents per minute on the Strike app right now. And you can find that on Twitter. They're actually doing that. So you can buy as little or as much as you want. And I promise you, not investment advice. In 10 years, you will be happy that you did. And even if it only moves up 20% a year for the next 10 years, you're still going to do better than 99% of the people out there. And I don't think it will only do 20% a year for the next 10 years. So with that, I'm going to close it out. Thank you for joining me today. This has been a fun one. Please like, please subscribe, do all of those things. Follow me on Twitter, BitSummerRip. This is Brian, and this has been Bitcoin Summer.